All right, picture this. What if you could get a cocktail from one of the world's best bars, but not in some fancy glass? I'm talking about a bottle you can pull right out of your own fridge. That's the huge, audacious goal of a startup called, fittingly, World's Best Cocktails, Inc. But, an ambition that big raises a really big question.
Yeah, can a bottled cocktail ever really compete with a world-class bar? Can a pre-mixed drink ever capture that magic? That single question is pretty much the heart of their entire business, the market they're jumping into, and yeah, the investment opportunity they're now offering to all of us. So let's break it down.
Okay, first up, a bar-quality bottled cocktail? To really get what they're trying to do, we need to look at the problem they think they're solving. Like, what's actually wrong with the cocktails we can already buy in a store?
So think about it. On one side, you've got the typical ready-to-drink aisle at the store, right? It's just flooded with stuff that's, it's low quality, super sweet, and tastes kind of artificial. But on the other side, you have the promise from World's Best Cocktails. We'll call them WBC. They're talking about a genuinely premium, balanced, bar-quality experience. Their whole bet, the whole shebang, is that you and I are finally ready to trade up.
So how do you even begin to deliver on a promise like that? Well, their answer isn't a what, it's a who. Tao Zrafi. If you've seen the Netflix show Drink Masters, you know who I'm talking about. He's a world-renowned mixologist, and that star power gives the brand instant credibility. It's a massive marketing hook. He's not just the face of the company, he's literally the creative engine behind it all.
All right, let's move on to Section 2, the $40 billion opportunity. Look, having a great product and a star founder is a powerful combo, but it's totally meaningless if there's no market. And in this case, oh boy, the market they're targeting is enormous.
We are talking about a global, ready-to-drink market, you'll hear it called RTD, that's on track to hit a staggering $40 billion by 2027. This isn't some tiny niche category anymore. It's one of the fastest-growing sectors in the entire beverage industry.
But WBC isn't trying to boil the ocean here. They're being smart, they're being strategic. They're laser-focused on just one slice of that pie, the premium U.S. market. And that space alone is worth over $4.3 billion. They're going after the customers who are already looking for and are totally willing to pay more for higher quality stuff.
And here is the really crucial part. That premium niche, it isn't just big, it's growing like crazy. We're talking over 20% compound annual growth. It's just expanding way faster than the overall RTD market. So WBC isn't just walking into a big market, they're trying to catch a massive rising tide of consumer taste.
So what's next? Section 3, the secret sauce. You've got the famous founder, you've got this hot market, but what's actually going on behind the curtain? Let's take a look at the company's secret sauce. A company like this needs a lot more than just creative genius. Backing up Tao Zrafi is some serious financial muscle. You got Larry G. Sweats Jr., who's a seasoned vet. This is the guy who knows how to raise capital and take companies public. Then there's Mark Penway, who brings that crucial accounting and operational know-how. It's really that classic perfect blend of the artist and the operator.
And this quote from the founder, it just captures their whole philosophy perfectly. They are not trying to make a good enough bottled cocktail. The standard they've set for themselves is dead simple. Is it worthy of being served in the best bars on the planet? That is the bar, no pun intended, that they have to clear.
Okay, and their business model? This is where things get really clever. First off, instead of sinking a ton of cash into building their own factories, they use what are called co-packers, third-party producers. This lets them stay asset-light so they can scale up fast without massive costs. Second, they're not just selling in one place. They're hitting multiple channels. We're talking wholesale distribution to stores and selling directly to you and me online. And third, and this is a really interesting twist, they've built out a totally different revenue stream. They have a subsidiary called Cocktail Buddies, Inc. that's making a non-alcoholic citrus replacement for other businesses. It's just a super lean, diversified, and really capital-efficient way to go about it.
Moving on to Section 4, the crowdfunding pitch. So they have the product, they have the team, and they have the model in place. Now the company is turning to the public to fund its growth. Let's break down exactly what they're offering.
So they're raising money using a specific rule called Regulation Crowdfunding, or you might see it as Reg CF. To put it simply, this is what lets private, early-stage companies raise money from the general public, not just from the super wealthy accredited investors. It's a way for a startup to get capital directly from the very community it's hoping to serve.
So what are the actual terms? Well, investors are buying common stock. That means actual ownership in the company at a price of $1.25 per share.
The minimum you can invest is $500, and their goal is to raise somewhere between $10,000 on the low end and $5 million on the high end.
All right, Section 5, bull case versus bear case. Now we get to the real heart of it, the investment thesis. What is the optimistic case for this company? And, maybe more importantly, what are the biggest risks? Let's look at the bull versus the bear.
So the bull case, the optimistic view, it's pretty compelling, right? You've got a celebrity founder, a market that's absolutely booming, and a smart, lean business model. But, and this is a big but, the bear case is just as powerful. I mean, the ready-to-drink market is extremely saturated with huge global competitors. The whole business basically depends on the reputation of one single person. They haven't made any money yet, and they have to navigate this incredibly complex maze of state-by-state alcohol laws. That's a huge hurdle. And honestly, nothing puts that bear case in starker terms than this quote right here, pulled directly from the company's own risk disclosures. Being pre-revenue just underscores how early this whole venture is. It means they're completely, 100% dependent on the financing they're hoping to get right now.
And the disclosures they made highlight other really crucial risks. The management team has the financial chops, sure, but limited experience in the actual beverage industry. The stock is illiquid, which means you can't just sell it on a whim whenever you want. And this one is critical. There's no key man insurance on Tao Zrafi. That means if something were to happen to him, there is no financial safety net for the company, even though the entire brand is built around him.
So, that brings us to our final section, the future in a bottle. Where does all this leave us? Let's just zoom out for one final thought on what this company really truly represents. Ultimately, an investment in this company, it's a bet on craftsmanship. It's a bet that a really compelling story, a genuine artist, and a truly premium product can still win, even in a market that's dominated by massive corporations with just bottomless budgets. It really asks that timeless question, can David still take on Goliath? That's the real story they're trying to bottle.